Welcome, everybody, to the RealAtom Lender Podcast Series, where you'll learn about the lenders on the RealAtom platform and the organizations they represent. My name is Tyler White, RealAtom's head of sales. RealAtom is the industry's #1 lending-as-a-service technology platform, empowering commercial real estate lenders like banks, credit unions, and non-banking organizations to generate more CRE loans. Today, I have the pleasure of introducing Mark Rabkin from RodeoLending. Mark, thank you for taking the time to present to us today. I'm going to pass it over to you to kick things off.
Thank you, Tyler. I really appreciate the opportunity to talk to the RealAtom. So my name is Mark Rabkin. I work for a company called RodeoLending. We are a 9-year-old nationwide bridge lender. I've been with the firm since day one. What we do is we provide loans on real estate for people who either need to close faster than the conventional lending process, or they have a loan scenario that has been rejected by the conventional world, but it makes good business sense. And what we're able to do is structure a 1 to 2 year bridge that gives the borrower the opportunity to take their non-conforming loan and turn it into a conforming loan. Now, the two owners of Rodeo, Richard Katz and Greg Bernstein, each of them have been in the lending world for over 20 years, doing private money, doing conventional commercial, doing residential loans. And what's important about Rodeo, we have our own institutionally raised fund. It's called the WestBridge Lending Fund. So everything's done in-house. It's our money, it's our decisions, it's our underwriting. We hold our debt, which is very important. So because we're issuing debt and we're holding debt, what we're doing is we're structuring loans that are a win-win situation. They work for the borrower. They don't overtax the borrower. They give the borrower the time to get their property straightened out. And it also works for us as a lender. The way it's structured, they're able to service and exit the debt. Now, the types of properties that we lend on single family, but since this is a commercial website, I'm not going to talk about single family. If you want to learn about our capabilities there, my number and my email are up. Please contact me. On the commercial side, we lend on most commercial properties. So and the ones that we like to focus on are multi-family, mixed use, medical office, self-storage, industrial warehouses, hotels, retail, skilled and assisted living, if they're 80 beds or higher. The types of loans that we do straight purchases, straight refis. We do cash out for the owners to buy additional properties. We do rehab, get TIs funded so they could get tenants to come in. We do ground up construction. And what we also do, and these two things, types of loans, I believe separate us from most of the lending world, is that we do construction completion. So they already went with a lender to do a construction loan, and it just didn't work out. They had issues with the lender and maybe the releases of draws, or the lender had issues with the borrower because he went over budget or he went over the time frame to build. Situations like that, if we get lien releases and it values out, what we do is we pay the current lender who wants out, we pay them off. We give the borrower the money to complete the project, but more importantly, we give them the fresh clock, the fresh 12 to 24 months needed to finish the property and either sell it or exit our loan. The other type of loan that we do that a lot of the other lenders out there just don't have a handle on yet is we do property repositions. That's when a borrower takes a property that's office building, and office buildings a tough market right now. There's people out there that are taking office buildings and they're converting them into multifamily, or they're converting them into student housing for universities. People are out there now taking older hotels and motels, and they're converting them into 55 and up living in the multifamily space. We also take dark big box retail, and we convert them to multi-tenant retail properties or self-storage. So those are two types of situations that a lot of lenders don't do. We do that. I think that puts us a leg up on other people. Last thing that we do that a good portion of the lenders don't get involved in is the skilled and assisted living sector. A lot of lenders, it's complicated. A lot of lenders don't want to get involved in that space. One of the owners has a background in that space, so we understand it. So it's not brain damage to us. Let's talk about what's probably most important to the borrowers and brokers out there, and that's where do we come in on pricing and our terms. So for the most part, we're a 1 to 2 year interest-only bridge lender. We can go up to 70% loan to value on most situations. We like loans between $500,000 to $15 million, in that ballpark. And then pricing starts at 7.99 and 2. And it goes higher from there, depending on 3 factors that are involved in every loan. And those factors are the length of loan. Shorter the loan, the better the pricing. Property's location and condition. Obviously, the better the location, the better the condition, the better the pricing. And then the last aspect that goes into pricing is the type of loan. A straight purchase, a straight refinance is always going to get priced more agreeable than heavy construction or heavy rehab, just due to the risk of construction and rehab. So that's where we fit in our box. Now, I'd like to show you, I think the best way to look at a lender's ability is to look at the types of deals that they're actually funding. So bear with me because I'm going to scroll and I'm going to show you some of our reposition loans. So a year ago, we did over a $14 million deal in St. Paul, Minnesota. An insurance company owned this office building and they moved locations. They wanted a newer building. And then the owner of this building, without a tenant, went into default, lost the property. One of our borrowers bought the property out of auction. And what we did was we helped them purchase the property and we helped them start the conversion process. So we gave them the money. It's a 16-floor property. We gave them the money to start the conversions of floors 1 through 5. Floors 1 and 2 were going to be a high-end grocery chain that our tenants own. And 3 through 5 is starting the residential conversion process. The loan right next to it in Park Forest, Illinois, isn't a property reposition so much as a property add. So it was a retail center, and then our borrowers came in to buy the center, but also wanted to put their grocery store chain into the property. So we helped them fund the purchase and the TIs in order to do that. Now we have another borrower who specializes in converting these big box vacant retail into multi-tenant retail types properties. So he has relationships with national franchises like Ross Stores, Marshalls, Harbor Freight, PetSmart, Ulta Beauty. So what he does is he takes down these dark retails, and even before he purchases them, he already has the majority of the space pre-leased to multiple retail tenants who want more exposure in the area that that property is in. Perfect example, we just funded a $7.2 million rehab loan where the borrower took the dark Kmart, and on this case, he had it 77% pre-leased. And we're doing the TIs to get the tenant in. So up top, you see the picture of the Kmart, and on bottom is the rendering of what the front of the big box is now going to look with multi-tenants. He's also done this numerous other times, and I just wanted to show a picture of before and after on another property that he did. This property, he put in a Ross Stores, he put in a Harbor Freight. You can see up top what it looked like when he started work on the property and then what he finished. And just a fun side fact, we did a loan for him in Oroville, California. That property was the first property in the United States that had a Chipotle drive-through. Their first drive-through ever in the United States was put into that property with help of our funding. So I just wanted to give people an idea of what we're doing in this property conversion space. But we do a lot of other loans. So please go to our website and then click on the recent fundings page. And you will see a lot of examples of what we're doing out there. Lastly, why I think, why use Rodeo? I think you should use us because we're fast, we're creative, we're flexible, we're really deal specific. The better the deal, the better we could structure the loan. We could do better pricing. We could do higher leverage. We could even go longer term. We do have the capabilities to go to 5 to 7 years if we like the situation. We could do bigger loans than 15 million. And I think I said this already, but I'll say it again. We could do higher LTV. Never say enough about higher LTV. Also, we're borrower friendly, and more importantly, we're broker friendly. I believe about 85% of our business comes from the broker community. So, we're very broker friendly. And that really, in a nutshell, is RodeoLending.
Mark, ton of great information, and a special thanks to you and RodeoLending for taking the time to present to us today. If you're interested in speaking with Mark directly, please feel free to contact him by all the channels listed on this page. If you're interested in talking with me in between episodes, feel free to email me directly, tyler@realatom.com. If you're interested in learning more about RealAtom or the Lender podcast series, please don't hesitate to visit the RealAtom website at realatom.com. Thanks again, everybody, for tuning in, and we'll see you on the next episode.